When the big cryptocurrency exchange, FTX, filed for bankruptcy in November, it was just one of several crypto-related companies to fail in the past year. But FTX was one of the most important players in the space, and its failure caused a crisis of confidence in cryptocurrencies. These events caused a rush on the bank Silvergate Capital, which serves customers who use digital currencies. Silvergate has faced scrutiny for its relationship with FTX, and the stock dropped from $50 on November 8, 2022, to $22 on January 4, 2023. When the bank announced its preliminary results for the fourth quarter, investors found out that things were much worse than they thought. The bank's deposits had plummeted, and the stock had dropped another 43% overnight. Hello. In today's video, we will look at what caused the Silvergate meltdown and where it could go from here. Before we begin, don't forget to hit the subscribe button and click the notification bell for more amazing content. Now, let's get this video started. Silvergate's deposit base shrank by nearly 70% in a matter of months. Silvergate Capital offers banking services for people who use cryptocurrencies. In 2013, the bank saw an opportunity to help customers deal with the uncertainty in the new cryptocurrency space. Its first product was the Silvergate Exchange Network, which lets cryptocurrency exchanges like Coinbase, Binance, and the now bankrupt FTX and US dollars to each other quickly and easily. The bank grew a lot as the price of Bitcoin soared to over $65,000 in 2021. From 2019 to 2021, Silvergate's total deposits jumped from $1.8 billion to $14.3 billion. Things started to change in early 2022 when a lot of leverage in the crypto space started to go away. Terra, a blockchain designed to support stablecoins, was the first to have problems in May when a series of large withdrawals caused its Luna token to drop. After that, the Three Arrows Capital hedge fund failed, as did Celsius and Voyager, all of which have filed for bankruptcy. Silvergate got through these events, and at the end of the third quarter, the bank still had $11.9 billion in crypto deposits. After that, however, there was panic because people were afraid that the fall of FTX would bring down everything in the crypto market. Customers started pulling money out of crypto in large numbers, which led to a huge drop in deposits for Silvergate Capital. In a press release on January 5, Silvergate said that deposits from digital asset customers had dropped by $3.8 billion, or 68% from the previous quarter. The bank had to sell debt securities to shore up its balance sheet. With such a big drop in deposits, Silvergate took steps to make sure it had enough money to cover future deposit outflows. The bank sold $5.2 billion worth of debt securities to get cash, resulting in a loss of $718 million. It currently has cash and cash equivalents worth $4.6 billion, which is more than enough funds to cover its total deposits of $3.8 billion. It also has another $5.6 billion in debt securities, and it will probably sell more to pay off its wholesale borrowings. This could cost it an extra $300 million in losses. The bank also wrote down the deemed stablecoin assets it bought back from Meta Platforms in 2022. This led to a $196 million impairment charge. This write-down is based on the assumption that its blockchain-based solution won't be out any time soon as it deals with its current situation. Here's what's next for Silvergate. Silvergate is preparing for what it says will be a sustained period of change by shoring up its balance sheet. As part of this change, it is cutting costs and has fired 200 people, which is about 40% of its workforce. In the future, it will also evaluate its product portfolio and customer relationships. If regulators haven't already contacted Silvergate, they will. Last week, the Federal Reserve, FDIC, and Office of the Comptroller of the Currency issued a joint statement warning about the risks crypto assets could pose to the wider banking system. The statement said, "It is important that risks related to the crypto asset sector that cannot be mitigated or controlled do not migrate to the banking system." Silvergate has always worked closely with regulators, but because of recent events, the bank is likely to be looked at more closely. Regulators might think that its crypto exposure is too high, and that it should diversify its deposit base to be less reliant on crypto activities. In the worst case, Silvergate could lose its banking charter if the review finds that it helped and encouraged FTX fraud against customers. Even though we think Silvergate is an important part of the cryptocurrency infrastructure, the past month has been a stark reminder of the risks of working in the cryptocurrency space. Investors with a high risk tolerance might want to take a chance on Silvergate stock, but since the bank's future is uncertain, most people are better off avoiding it for the time being. That was all for today's video. What do you think of Silvergate's position? What do you think about the crypto market in general? Tell us in the comments. If you liked this video, please like it and subscribe to the channel. Thanks for your time. We'll see you later.